Hello, everyone. I would like to welcome you to the FinTech Festival in Canada. My name is Jennifer Reynolds, and I'm the President and CEO of Toronto Finance International, and we're delighted to be participating in the conference here today. We thought it would be great to kick things off with a welcome from the Honourable Victor Fedeli, Minister of Economic Development, Job Creation and Trade for the Province of Ontario in Canada. Over to you, Vic.
On behalf of the Province of Ontario, Canada, welcome to the Singapore FinTech Festival. As our world becomes increasingly digital, innovation in the FinTech sector has never been so important. This is especially true as we navigate the COVID-19 pandemic, with millions of people working from home and making online purchases. To succeed in the FinTech industry, you need an incredibly niche set of skills. And Ontario is home to a roster of talent with the winning combination. The province's IT sector is the second largest in North America, with more than 300,000 employees. We're well known for having the world's soundest banking system, but it's the diversity of our industry that attracts major corporations such as Visa, Square, and our own homegrown giant, Shopify. From mobile payments to cybersecurity, our mix of global financial expertise and IT prowess offers investors a unique advantage. To learn more about the province's FinTech industry or to connect with one of the Ontario companies attending the Singapore FinTech Festival, visit sourcefromontario.com/SFF. Enjoy the conference.
Well, welcome everyone. I thought I would take you through a bit of an overview on the FinTech ecosystem here in Canada and in Toronto specifically. So just to give you a bit of background, Toronto Finance International is a public-private partnership between Canada's largest financial institutions and the public sector. And our mission is twofold. Number one, to promote the Toronto Financial Centre globally and our Canadian financial sector, and then domestically to focus on the growth and competitiveness of the sector. And we really have the leaders of both government involved in our organization and leaders of the financial services industry. We also work very closely with the broader ecosystem in Canada, with academia, with economic development associations, to make sure that we're all working together to have a healthy and thriving financial services sector and FinTech ecosystem. Our organization works very closely with other financial centers around the world on the various challenges and opportunities that we face within our economies and within the financial sector. So just to dive right into it, the financial services sector in Canada is really a key pillar of our economy. Toronto has the second largest financial center in North America. And a less well-known stat, perhaps, is that we also have the second largest tech cluster in the region, obviously second to the Silicon Valley in the US. So we really have a tremendously strong talent pool, both in financial services and in the tech sector as well, which really provides a competitive advantage for us. That tech sector is fed by a very strong group of graduates coming out of our STEM programs. We have the second largest group of graduates there as well. And the growth in the tech sector in terms of jobs has been tremendous, really. We created 67,000 new tech jobs over the last, it's the second most amount of tech jobs in North America. So really that alongside our very strong incumbent financial institutions, we have some of the largest banks and pension funds and insurers globally in the region. So clearly, I think we are well known for the stability of our banking system. Certainly, we have five large banks here who are in the top 100 banks globally. If you think more about our life insurance companies, they have total assets of 2.5 trillion, just our three largest firms. And global players like Manulife and Sun Life, their revenues, actually, the majority of their revenues are from outside of Canada, so global players, and also a very healthy and thriving property and casualty insurance sector as well. Our public pension funds are, as I mentioned, global investors. They hold about 10 trillion in assets, and they're ranked third in terms of total assets in private pension plans globally. Our Toronto Stock Exchange, who we're going to hear from later, in terms of listings, is #1 in mining, #1 in clean tech, second in globally listed companies as well. Very active in attracting international listings to our Toronto Stock Exchange. Now to dive right into the FinTech ecosystem specifically. We have 1,200 FinTechs across Canada, and it really is a very diverse set in terms of where they play in all elements of the financial services sector. Investment has been very strong. We've actually had one of the highest investment rates in FinTech over the last few years. You can see us there at 8 in terms of the global look, clearly dominating the investment US and China, but we've seen strong investment here in Canada as well. The growth rate actually in that investments from 2010 to 2018 is 118%, which is the highest amongst financial centers globally. I talked a bit about the growth in tech sector jobs as well, and we've also had tremendous growth in our AI, in the area of AI, which I'll talk about in a little bit too. We have very strong partnerships between our incumbent financial institutions and our incubators and accelerators. I think that's certainly helped the growth of the ecosystem, is having those strong partnerships between the financial, the big banks and insurance players to support the growth in that area. We have about 20 accelerators and incubators in the area in Canada. And in terms of AI, as I mentioned, we've had tremendous growth in AI in Canada. We actually rank 4th globally in terms of the Global AI Index. Canada's AI sector. We've created a tremendous amount of jobs as well. 50,000 jobs have been created in the AI sector, which is fantastic. And Canada has produced the most AI patents per million people among the G7 nations and China. Digging into that, why has that happened? Certainly, it's been a tribute to Geoffrey Hinton, who is known as the so-called godfather of AI. He works at the Vector Institute with the University of Toronto. I mentioned earlier, we've got very strong growth in our STEM grads as well, which is certainly helping to advance that particular part of the sector. And we've also had good commitment from the government on that front with investments from them as well. What that's resulted in is not just growth within Canadian firms in AI, but it's managed to attract global players to our ecosystem to set up development hubs here in the Toronto region and more broadly in Canada as well. So you can see the names on the slides here. They're recognizing that talent pool and bringing their organizations here to take advantage of that. A few other things I would mention in terms of the FinTech ecosystem. There's been a lot of investment and work in quantum and certainly in blockchain, as in every financial center. And cybersecurity, of course, has to be a top priority. And we've seen a lot of activity there. We actually have the 4th most active, in terms of deals, we're the 4th most active country globally in cybersecurity, and a big commitment from both the private and the public sector in advancing that part of the sector as well. I'll talk a little bit about our talent pool as well, as that obviously is critical to any FinTech ecosystem. You know, I think it's education that defines us. I think it certainly is an investment from both the public and the private sector, and making sure that we've got a robust FinTech ecosystem and talent pool to fuel that. If you think about the technology talent, I've talked about that and the growth we've seen there. We actually have 8.8% of Toronto's workers work in the technology sector. So that's the 3rd highest concentration in North America. So I can't stress that enough, that in addition to having a very strong financial sector, that tech sector is really helping to fuel the FinTech ecosystem as well for us. In terms of the workforce, I mentioned STEM grads, but we're also one of the most educated regions in the world in terms of postgraduate degrees. So very highly educated workforce here in Toronto. We also have a strategy in Canada around skills development and around attracting highly skilled workers to Canada. We have a global skills strategy, which allows us to bring skilled talent in much more quickly. There's a 2-week application process, and that has also fueled our talent pool here in the region. Certainly, immigration is a part of Canada's economic development strategy, and we have benefited from a tremendous pool of talent coming into the country through this process. If we think about just generally the cost advantage and the regulatory environment, we certainly have a very competitive, cost-effective region from that perspective. This slide here shows you sort of cost per workstation, and you can see as we compare ourselves to other financial centers globally, Toronto compares very well in terms of overall cost per workstation. There's a very strong policy environment. We're very focused here on making sure we've got the right environment so that we can have our FinTech ecosystem thrive. So a lot of work around open banking right now in the region, modernizing our payment system as well. We do have a regulatory sandbox for FinTechs as well. And our Ontario Securities Commission is also joined the Global Financial Innovators Network at GFIN to help coordinate with our global regulators. Just to finish off on Toronto itself, we're diverse. It's very important to us. I talked about our immigration policy. Toronto is one of the most diverse cities in the world. If you think about our population here, 51% of our population here in Toronto was not born in Canada. So that's important to us. It's a very livable city. We welcome the immigrants that come here, and it's part of what we believe is part of sort of the fabric of Canada is that diversity. Clearly very stable, very livable city that we're extremely proud of. And I think that too creates to the success of our FinTech ecosystem. So that is the high level overview. Thank you to everyone for joining us here today. I'm so happy to be kicking off this, and we are very delighted to be participating in the festival. And we've got a good lineup for Toronto and for Canada coming up in our sessions. And I'd like to introduce the next one, which is with the Toronto Stock Exchange and also our Toronto Stock Exchange Venture Exchange specifically. And we're going to be talking about the rise of the Canadian FinTech ecosystem and really dive into some of those elements in a deeper way. So again, thank you so much for joining us here today, and I hope you enjoy the rest of the programming.
Good morning, good afternoon, good evening, everyone. It's my pleasure to welcome you all online here today. My name is Danny Lipkin. I'm a Director of Global Business Development at TSX and TSX Venture today. And it's my pleasure to welcome everybody to the FinTech Festival in Canada. Today, for the next 45 minutes to an hour, we're going to talk about the rise of the Canadian tech ecosystem. With me today is Gregory Feller, President, CFO, and Director of Mogo. Mogo is a TSX and NASDAQ listed FinTech company. Before we get into the discussion with Greg today about the rise of the Canadian tech ecosystem, I want to just share a bit of an overview about what we are seeing in terms of the tech ecosystem overall in Canada, specifically with regards to what's going on the TSX and TSX Venture. So in terms of Canada and our presence in the world, you know, many people underappreciate the global leadership, the world-class financial institutions, and economic stability that Canada avails itself to. Over the last 5 years, over $250 billion of equity capital has been raised on the TSX and TSX Venture Exchange. This would rank us number 3 in terms of companies around the world for raising equity capital. And what people also don't recognize is that it's global traders, global investors, global asset managers who are coming to Canada to invest in these companies, recognizing that there's a growing innovative number of companies coming out of Canada, and that it's important that these global asset managers continue to invest in these types of companies. Now, what's unique to Canada is that, you know, many people will recognize us as a natural resource, heavily focused economy. But this has been shifting over the last few years, and we can see this by the change in our market capitalization on TSX and TSX Venture. Our growth sectors, which would encompass the innovation and tech ecosystem, are now accounting for 40% of the overall market cap of companies listed on the TSX and TSX Venture. People underappreciate how much this has been growing. So I want to just give a bit of an overview of what TSX and TSX Venture Exchange are. TSX is one of the world's largest leading global exchanges, you know, with multi-billion-dollar companies listed. You know, the average market value is 1.8 billion, and the average financing size is 77 million. But what's unique to Canada is that we have the TSX Venture Exchange. Now, this is a customized exchange that is built for small, emerging growth companies. And this is where we've seen a lot of great tech companies develop over the last 5 to 10 years. Typically, a company would go public on the TSX Venture when they're at a much earlier stage. So the typical average market value for companies on the TSX Venture would be $30 million. And the average financing size would be $3 million. So what's happening is that we are seeing earlier stage companies who are going public, growing in size, and then graduating up to the TSX. If we actually look over the last 20 or so years, there's been close to 700 companies that started off on the TSX Venture and graduated up to the TSX. We have over 65 companies that have market values of greater than 500 million that started off on the TSX Venture. And close to 40% of our innovation companies that are now listed on the TSX actually started off their life as a public company on the TSX Venture. At the bottom of the slide, you can see a couple of these names, such as Absolute and Enthusiast Gaming, that were earlier on tech companies, started on the TSX Venture and graduated up to the TSX. Finally, I mentioned earlier the fact that, there's been this growing demand in innovation. And, Canada is known as a hotbed for natural resources such as mining and oil and gas. But when we look at the new listings over the last 5 years on our two exchanges, it's actually been tech that has been the leading charge for new companies listing. It's been the #1 sector for IPOs and new listings, and it's also been the #1 sector for non-Canadian IPOs and new listings. And what we've seen is that global companies in the tech space are recognizing that Canada has an attractive market to help them grow and build businesses in the tech ecosystem. Last year alone, we saw over 6 companies from Israel in the tech space come and list on the TSX Venture to help them grow the business. We see many US companies come onto the TSX and TSX Venture to help them grow their businesses. And not just listing their companies, but we see these tech companies are actually having a presence in Canada related to their TSX and TSXV listings. And this is helping to grow that overall ecosystem. And now if we look at the returns of the TSX tech sectors, this again really speaks to the growing demand. Over the last 10 years, the annualized return of the S&P TSX Tech Index was 20.3%. This handily beat the composite index, the S&P 500, and was basically on par with the NASDAQ 100. Through the first 6 months of this year, that same tech index on TSX was up close to 40%. And we have a lot of Canadian and global innovators that are choosing TSX as its home. I think it's exemplified most the growing rise of the Canadian tech ecosystem by Shopify's presence now as the #1 public company in Canada. Many people forget that that was a name that went public just 5 years ago. And, its operations started in Ottawa only 15 years ago. It's incredible to see the rise of a company like Shopify from 15 years ago as a startup to now becoming the largest public company in Canada. And what spawned off through Shopify is entrepreneurs are seeing that Canadian entrepreneurs can build tech companies anywhere in Canada. You don't have to be in Toronto, Waterloo, Vancouver, Montreal. You can be in Ottawa, Edmonton, Calgary. And it's just the availability of great tech talent and shred credits and a supportive ecosystem through our venture capital community that is helping these companies grow and not necessarily need to be located in Toronto, Kitchener-Waterloo, or Silicon Valley. Last 2 examples of what's been happening from the tech ecosystem overall is another Ottawa-based company called Kinaxis. They are a provider of software solutions for sales and operation planning and supply chain management. Obviously, over the last 6 to 9 months through the pandemic, a lot of their software has been critical in helping ensure the continuation of the economy. And obviously, this company has risen quite tremendously in terms of its share price over the last 9 months. And Nuvei Corporation. Nuvei is a fintech company based out of Montreal. They recently IPO'd on TSX, and it was the largest tech IPO in TSX history. They raised close to $1 billion in funds. That's in Canadian dollar terms. Nuvei was started approximately 17 years ago by Phil Fayer. Again, doesn't have to be in Silicon Valley, Toronto. Phil started this company in Montreal, grew it over time, and now, is a world-class leading fintech company out of Montreal, who celebrated, again, the largest tech IPO in TSX history just 3 months ago. So with that, I'm going to stop my presentation, and I'm going to welcome in Greg Feller from Mogo into the discussion. Greg, thank you very much for joining us today. Maybe to kick things off, you could introduce yourself and provide the audience with a bit of an overview of Mogo.
Sure, thanks. Thanks for having me. Greg Feller, President and CFO of Mogo. I spent 16 years on Wall Street in New York, London, and Silicon Valley as a technology banker before joining my identical twin brother to run Mogo. We are a Vancouver-based company. We've been around for 17 years. We IPO'd on the Toronto Stock Exchange 5 years ago. And Mogo is really focused on the digital transformation of consumer banking that's happening globally, which has also been accelerating during COVID as more and more people turn to digital solutions. Canada's really been behind as far as the digital adoption of consumer banking, but we are starting to see that accelerate in Canada as well. We've also been pioneers around what we call sustainable finances, and sustainable finances is really a concept of using technology to not just make it easier for consumers to get access to their financial life, but actually using technology to help them make smarter financial decisions. As an example of this, the Mogo card, which is a prepaid Visa and debit card, really focuses on helping Canadians use their own money to spend, so they're in control. And then we also have a carbon offset on all their spending on the card, which directly offsets their spending, so they can effectively become carbon neutral by moving their spending to the Mogo card. We also have launched Canada's first free credit score, as well as Canada's first free identity fraud protection service, all within the Mogo mobile app. And then we launched a couple of years ago, which is gaining increasing attention these days, our Bitcoin account, which allows Canadians to easily buy and sell Bitcoin within the Mogo account. And then we provide credit solutions as well within the account.
So Greg, you kind of mentioned how the Canadian banking system has been slow adopting to the digital transformation. How have you been able to overcome some of those challenges in gaining more traction in the digital experience for Canadian consumers over the last number of years?
Yeah, so I think we've taken an approach of education, for one. Part of it is education, getting people comfortable with, accessing and putting their information all in on a digital footprint in a mobile app. And then by trying to make sure we're offering value and utility in a compelling free or freemium model, as we call it. And that really was one of the big innovations in Canada. I mean, today banking in Canada is still very much, there's still a monthly fee for a basic checking account for a lot of Canadians. So coming out with Canada's first free credit score, and then recently launching a free identity fraud solution, what we're trying to do is provide Canadians with compelling value that's free, that gets them engaged and aware. We also provide what we call our money classes inside the app, where we try to educate, and we think that that's been a big element that's been missing in financial services. Today, most consumers are stretched on the debt side. They've overspent on their credit cards. 50% of Canadians carry credit card debt because of that. They are not saving enough. They're not that aware and understanding of the impact of things like fees and the power of compounding. And so we're trying to do this in a very simple way, in an engaging way. And that's another element that we're bringing to our mobile app is gamification. So how do we make it fun and engaging to make smart financial decisions? As an example, our free credit score, the highest tier of credit rating, we've dubbed Rockstar, and we hold contests around how do you achieve Rockstar status in your credit score. So we're trying to make it cool and engaging to make smarter financial decisions, which actually helps Canadians think about it more and learn more about it.
And so, Greg, I guess you are one of the early companies in the fintech space in Canada. There's obviously been a growing trend and many more entrants in the space as of late. How have you seen the fintech ecosystem in Canada evolve in terms of competition? Has that resulted in harder to hire for talent, or has it made it easier? Does the enthusiasm level in the fintech ecosystem in Canada, has that been growing as a result? What have you noticed in terms of those changes as one of the early entrants?
Yeah, I mean, arguably we were one of the early entrants globally. There's not a lot of fintechs that have been around for 17 years. So, and we were definitely early in Canada, but as you say, there's been a number of companies that have come on the scene, and I would say the other major player in the Canadian marketplace would be Wealthsimple. They're private. We sort of view Wealthsimple as the Robinhood of Canada, and Mogo as the Square Cash App of Canada. So we're coming at it from a different approach. The challenge Canada's had, as you know, is that we don't have the deep venture capital pools that places like Europe and the US have, and therefore it's been a lot more challenging for private companies to get funding, especially if you're only focused on the Canadian market. That's also one of the reasons we went public probably earlier than other companies would in other markets, because it was our path to raising more capital and investing. The other challenge Canada's had is because we haven't had that ecosystem. A lot of the developers in that have had to sort of, as we say, learn on the company's dime to build up that expertise. When you're in Silicon Valley, you can hire people that have literally been there and built these products out. You can hire marketing people that have been there, done that, built billion-dollar plus companies. And earlier days in Canada, that was a bigger challenge. But it also becomes a competitive barrier, because if you do hire that talent early and build up that expertise, it's a longer road for competitors to do that. But absolutely, the tech talent is increasing in Canada on both coasts. Obviously, you talked about Shopify in Ottawa. In Vancouver now we have Amazon with a big presence, Microsoft with a big presence. Slack obviously was just acquired by Salesforce. So increasingly, there's a lot more tech talent in Canada, and it is making it more difficult to keep talent. We're also seeing, because of some of the immigration policies in the US players set up offices in Canada to hire talent, even without a presence in Canada on the product side. So we're seeing that in the fintech space. Chime recently opened up an office in Vancouver. I think the advantage the Canadian companies have is that a lot of our developers want to feel like they're making a big impact, and working with the team, being part of building out a company in Canada, seeing the product, using the product, having their friends use it and family use it, they actually feel better about it, and feel like they're making a bigger impact than potentially being one of hundreds of thousands of employees in a Canadian office for a company that they're sort of doing development work for people in the US. So I think that's probably the strongest appeal that the Canadian companies can have, because quite frankly, with valuations where they are today, technology companies are increasingly paying a lot of money for tech talent in Canada as well.
Great. And so, has the ability also, though, to attract talent into tech been a bit easier over the last number of years? I mean, you mentioned there's probably a little bit less of, what we used to see in Canada as the brain drain of everybody going to Silicon Valley. What we've noticed now is in Toronto, there was more tech people hired in Toronto than San Francisco, Seattle combined over the last number of years. We're seeing more people actually reverse, come back from Silicon Valley and actually move back to Toronto, start up new tech companies here. Are you starting to see a bit of that effect, and there's more enthusiasm towards staying in Canada versus going to the US than maybe you did 5 to 10 years ago overall?
Yeah, I mean, absolutely. Again, because we are seeing a successful tech ecosystem in Canada, when you've got, as I say, players like Slack getting acquired for close to 30 billion by Salesforce in Vancouver, and Shopify, arguably one of the most successful technology companies globally in Canada. I think increasingly Canada has a lot of credibility in the technology space, and I think our developers, as I say, would, all things being equal, prefer to be building a Canadian company, working in Canada, building a Canadian company, than working in Canada, helping support a U.S. business. And obviously with COVID as well, you're seeing we've had developers that have been working for U.S. companies that the U.S. company wants them to move back down to the U.S. and they don't want to, and they want to stay in Canada. That's obviously an attraction for us. So absolutely, the tech talent has increased significantly since we started. It's become more competitive as well because of that. But ultimately, I think it's better because we have deeper pool of talent, and it allows companies to move a lot faster. Because as I say, in the past, when you had to hire the talent and train them, it took a lot longer to ramp up than it does today.
And so I just want to go back to a point you made earlier, how you went public a number of years ago because there wasn't necessarily the availability of private capital. So what were some of the considerations of going public? A lot of people around the world look at Canada and don't understand this ecosystems of companies going public at earlier stages than they would anywhere else in the world. What were some of your considerations and thinking at the time of going public?
Yeah, so obviously going public, brings additional costs for sure to a company, and a lot of additional requirements, right? I mean, you are a publicly reporting entity. You obviously have to have audited financials. Everything is a lot more transparent, but the benefit side of that is that you get a lot more access to capital, and as you just mentioned, in Canada there is a history of earlier stage companies going public earlier, and investors investing in earlier stage companies in a public context, versus say the U.S. where there's a ton of capital for private companies. And quite frankly, because of that, in the U.S. what you're seeing is, by the time companies go public, they could be 50, $80 billion companies by the time they go public. And the majority of that return has actually accrued to just private investors. And I think, Shopify being a great example in Canada, you mentioned Kinaxis, there's a lot of examples where, the earlier stage companies have a potential to generate significant returns for public shareholders in Canada, which I think is unique. The other thing is, in our sector anyway, transparency and being public actually helps our credibility as we attract customers, especially to deal with their financial lives. They want to, make sure that they are working with somebody that's a trusted party. And being for instance, we are the only TSX listed company in Canada that allows you to buy and sell Bitcoin right now, and we think that helps from a credibility perspective and a trust perspective with our customers.
And so I guess you have you're mentioning a lot of your relationships with regulators and specifically banking regulators. How has that kind of changed and evolved over the last number of years in terms of their acceptance of FinTech and what you're doing with consumers? How has that changed the last number of years?
Yeah, so we are not a bank, so we are not regulated as a bank in Canada, but we are subject to a lot of different regulations. across Canada. As an example, on the crypto side, we are now a FinTech regulated business and a money effectively licensed as a money services business. But I think there's definitely an increased awareness of helping support the FinTech ecosystem. I mean, Canada's banking, as you know, has been pretty concentrated among a handful of banks for, effectively forever. And so I think we've been slower to adopt that. However, if we don't adopt policies that support technology and innovation around financial services in Canada, what is effectively our largest industry in Canada today in terms of employment, Canadian banks will make $100 billion of pre-tax profit this year, is at risk of that value transferring to the big players in the U.S. like a Google, like an Amazon, PayPal, Facebook, etc., and which we've seen in other sectors like media, advertising, retail. So I think that there is a more awareness and increasing support, but obviously we think that there needs to be continued support around building out the FinTech ecosystem in Canada.
Sorry, I was having a little bit of technical difficulties there for a sec. Greg,
I guess David's now joined us. Hey, David.
Oh. David. So, David, maybe just to help people understand who you are, maybe you'd like to give a quick introduction and a little bit of an overview of VersaBank.
Certainly. Sorry for the long delay in logging in. We had, of course, technical difficulties. So I'm David Taylor. I'm the founder of VersaBank. I'm a husband and a father of four, an avid pilot. I like to think of myself as an innovator. And VersaBank was likely the first digital financial institution to be formed. I formed it in 1993. With the idea I could use the new technologies at that time to do away with the need for branch banks. It evolved, and it's I think finally come of age in the last, say, 5, 6, 7 years, where folks now understand what a digital financial institution is all about.
Great. And so, David, maybe if you want to just give a little bit of an overview of how VersaBank participates kind of in the digital banking ecosystem, what it is that you do that makes you so unique, and a little bit of the evolution of the company over the last 25 years or so. Obviously, you are well ahead of the game in terms of digital banking, but how the last number of years you've kind of accelerated that growth from a technology perspective.
Yeah, so we operate a B2B model. So what that means is we support fintechs throughout Canada. We have about 25 partners now, and we buy their loan and lease receivables as they're generated. So they're our interface with the market, and we're a Schedule I Canadian bank with access to deposits at economical rates. So what we're able to do is fund these loan and lease receivables as they're generated, hold them in sort of a data warehouse, electronic warehouse for our partners. It enables them to go about what they do best, i.e. interface with their customers and provide them with delightful websites and good customer experience, manage the relationships. And we do what we do best by providing a economical storage facility for these loans and leases as they're developed. It works very well. We're very proud of it. All throughout Canada, we have every conceivable loan on the books, whether it be hot tubs, motorcycles, home improvement loans, you name it. All kinds of loans and leases on our books, but we have no interaction with the underlying customer. So we leave that to our partners.
Yeah. So Greg, I just want to go back to a question with you for a second. You recently announced a pretty transformative acquisition with Carta. Maybe just give a bit of an overview of that potential acquisition and what it means for Mogo overall.
Yeah, so as you said, we announced recently that we're acquiring a company called Carta Worldwide. They are a next-gen issuer processor, compete with, the big US player would be a company called Marqeta, which is a company that is rumored to be going public next year in the US. And effectively, when you use a card, a Visa or a MasterCard at the bank, at a merchant, you may use a Square or a Moneris reader in Canada. Those are merchant processors, and then it effectively goes through the rails and ultimately has to be processed by the issuer side, the bank, and that's what Carta does. But they're a next generation platform. So this is really for us does a number of things. Mogo has been evolving from, we went public as an online lender, but today we sold our installment loan book earlier this year. And with our crypto account, the Mogo prepaid Visa card, and our plan to launch a P2P solution in 2021, we increasingly are becoming a digital wallet and digital payments business. Carta has over 25 years of digital payments experience. They're one of the most experienced in the industry, supporting big players like TransferWise in Europe as an example. So bringing that experience in-house, that expertise in-house, bringing that important part of that technology stack in-house, we believe gives us a competitive advantage. And also it really opens Mogo up from a Canadian-only focused company on the B2C side to now having a B2B segment of our business that's focused on the global digital payments market, which is a $2.5 trillion market. Almost 90% of Carta's revenue is outside of Canada, and we're doing that in an all-stock transaction, which we expect to close in January. So we're super excited about that transaction for us.
Awesome. So one thing that's been on investors' mind growing over the last year or two has been ESG and a consideration for both investors, for customers with who they're choosing to either bank or buy products from. Have Greg and David, I'll throw this out to both of you. Have you made any changes at both the corporate level and the customer level to appeal more to the social conscious investors and customers and investors? This has been a growing trend, ESG. We've heard it for a number of years, but I think we've finally seen a tipping point the last year or two. How have you both transformed your businesses to appeal both, I'd say it's twofold, to investors and to consumers? Maybe, Greg, I'll start with you.
Sure. So, as I mentioned, we launched our prepaid Visa card recently with a carbon offset, and we're really one of the only company in Canada with that program, maybe one of the only ones in North America. But effectively, what we have done is we have made the link within this concept of sustainable finances. We have made the link between consumption, financial health, and planet health. And that link is that about 70% of our individual carbon footprint is driven by our consumption. What is the biggest challenge consumers have today? Their biggest challenge is they're actually overspending. They're overspending, which is why 50% of them carry credit card debt. How do you improve your financial health? You reduce your spending, you reduce your consumption, and by definition, you will reduce your carbon footprint. But we went a step further to say that all the spending that you do, if you put it on the Mogo account, effectively, we have partnered up with an offsetting company, and we will do a direct carbon offset, 1 pound of carbon offset per dollar spent on the card. So as we say, it's the ultimate rewards program. It's about saving the planet. We absolutely believe that this whole ESG area is increasingly key for your business, because the next generation, the millennial and Gen Z, are making decisions, purchasing decisions, and relationship decisions based on their view of the impact a company is making on the environment. And if they believe that you as a brand are not doing the right things, they will start boycotting your brand. So actually, there is a very direct link, we believe, between doing the right thing as it relates to ESG initiatives such as the environment, and ultimately driving shareholder value, because ultimately consumers are going to be, changing where they allocate their dollars to companies that they believe are actually supporting these initiatives.
David, on your end, how is this? How has the ESG evolved some of your thinking, and both investors and consumer, over the last number of years?
Well, we haven't changed much over the years. We like to think that we've always been aware of ESG matters, and always had a welcoming environment for our staff and our customers, and encouraged social and environmental awareness. Over the years, we've been particularly excited about providing financing for projects in Canada's north and the Arctic that have been environmentally friendly type projects. We provided, for example, hydro lines up to remote locations to preclude the use of diesel fuel to provide electricity. We've provided financing for hospitals and schools throughout the Arctic. So frankly, I'm encouraged to see ESG movement progressing as it is. I think that's what we business folks should always be thinking about, a win-win. In our case, we think we have a highly efficient banking model, and how we can use it as a tool to provide financing in areas that perhaps more difficult for other banks that are helping our fellow humans have a better life and preserve in the Arctic, the highly sensitive environment that they're living in.
David, I just want to go back to a question that I had earlier asked to Greg and get your thoughts on it. With the rise of the tech ecosystem in Canada, and sometimes the competition for talent and the continuing evolution of that talent base in Canada, has it presented you with a challenge or opportunity in terms of employment for your own employment base over the last number of years? Or has it been, a hindrance? What have you thought in terms of the talent system in Canada over the last few years, and its ability and your ability to attract that talent?
Well, it's never been a hindrance, and I think if anything, there's more qualified employees to choose from. We live primarily in London, Ontario, so we have the advantage of being close by to Toronto and the 20-odd universities that are in Ontario. So it produces a lot of qualified people, and oftentimes information technology professionals will prefer to live around London, a place that's a little cheaper to live in. So we're able to attract people quite easily. We try to keep a really happy, cheerful work environment. We have our facility, our main tech facility, located at London Airport, and it's complete with ping pong tables and pool rooms, and of course a variety of airplanes to take folks for rides in. So no trouble at all attracting qualified people, and if anything, it's just got better over the years with the universities training more people.
Okay. Greg, I guess, where do you see, Mogo in terms of the next few years going forward? You mentioned a bit of the evolution with the Carta acquisition. How do you see the continued evolution of Mogo over the coming years in terms of your strategies?
So at Mogo, as I say, that we now actually have sort of two segments, a B2C and a B2B. On the B2C side, which is really Mogo in Canada. Our goal today, we have just over 1 million members in Canada. We're generating about just under $40 of revenue per member per year. As an example, the average bank in Canada is generating, core credit unions generating over $1,300 of revenue per member per year. So a massive TAM. Our goal in the next 3 to 5 years is to grow that member base to about 3 million members, and then increase our average revenue per member to closer to $100, which is still significantly less than where any of the banks are. So we see massive growth opportunity for Mogo in Canada, and our plan is to continue to add innovative products and solutions that, as we say, help Canadians make smarter financial decisions, make it easy for them to get in control of their financial lives, make it engaging and fun. We've actually recently launched a Bitcoin rewards program where we're actually rewarding good, positive behavior as it relates to making smarter financial decisions with Satoshis, which is a unit of Bitcoin. So we think, doing things that are appealing to really millennials and increasingly Gen Z is in one way we're going to win against some of the traditional players. And then on the B2B side, our plan is to invest in the Carta business. We're going to be launching in the US next year with Carta. And we will continue to look for acquisition opportunities. We think there's an opportunity in Canada. Because of COVID, everything is accelerating. We think the financial landscape is going to be dramatically different in the next 24 months. And scale matters. And a lot of the smaller players we think are going to be looking for homes that are going to give them more access to capital. And if it strategically fits for us, we're going to look at that as well. So we see a number of opportunities on that front as well.
So Greg, you mentioned a bit of Bitcoin and the crypto business in Canada. Have you noticed Canada has done more favorably in the crypto ecosystem overall? There's a bit of a better understanding in Canada, maybe relative to other places. Has there been earlier adoption here in Canada, would you say, relative to some other places, or are we a bit behind? Where would you say we kind of place overall?
Yeah, it's a mix. I mean, Canada, as you know, was a hot spot for crypto mining, and obviously a lot of companies raised capital on the TSXV and the Toronto Stock Exchange as related to mining, and that was kind of back in 2017, where there was clearly a Bitcoin bubble, and then that bubble kind of burst, and a lot of those businesses kind of faded. Although, now that Bitcoin is sort of back to, historic highs, there's an increasing amount of attention on it. Our view around Bitcoin is that we see it as not as a currency, but as a store of value, this sort of, digital gold or gold 2.0 concept. And we believe that it's an asset class that increasingly millennials and Gen Z want access to, and we want to make it easy and safe for Canadians to get access to it. I think actually adoption is behind places like the US, and that's because the on-ramps into crypto still aren't mainstream. I think Mogo's positioned to really be one of those mainstream on-ramps in Canada. In the US, you've got major players like Square and their Cash App. They're doing over 6 billion in volume of Bitcoin a year right now through that. And then PayPal recently announced launched Bitcoin in the US as well. So you've got major players in the US that have are making a big push around crypto, which I think is accelerating adoption there. But like most areas, Canada normally follows and catches up, and we expect that to happen in Canada as well.
David, have you been watching a bit of this? Of the crypto evolution in Canada? Have you investigated that on your end of any involvement, or is it something you just continue to monitor overall?
No, actually, I think we were the first in the world to create a digital vault over 2 years ago, launched it, called it VersaVault. And originally I had it planned to store super sensitive documents, but moments after after it hit Bloomberg and was announced, we were inundated with calls with cryptocurrency exchanges looking to use the vault to store their keys in. At that time, more than 2 years ago, I thought Canada was in a rather immature regulatory environment for to get into that business. So we partnered with a company in Europe, and that's using our vault for cryptocurrency keys. Like Greg, I think Canada's coming back now. I think there's been lots of reasonable rules, regulations put in place that support the cryptocurrency industry in Canada. So we'll be likely coming back to Canada with our vault, but as usual with our companies, sometimes coming out a little too soon with something doesn't do us any favors. So we're keenly watching it, and our vault is I think a wonderful product for keeping keys safe. The other area that we're in is cybersecurity. As a bank, we find ourselves in a highly hostile cyber environment. So we invested a lot in cybersecurity for ourselves, and we have just recently acquired a company, DBG, Digital Boundary Group, that is well known in North America for cybersecurity. And with that company, we feel we have a full suite of cybersecurity products that we can provide to other FIs in Canada, in North America. We're headquartered in Washington, D.C. with the former head of Homeland Security as our chairman. So, there's areas in this changing world that we think as a bank and with a little extra knowledge, capability, capacity, particularly in the cyber world, that we can add some value. So that's what we did recently. That was a few days ago, that acquisition.
Has obviously cybersecurity has been something that's been on your mind, for 25 years, David. Has that been an increasing area of investment, just given what we've seen on a global basis towards a lot of financial institutions, and just the potential for ransomware attacks? Has that been a growing area, not of concern, but just attention always? Something always top of mind for you, but even more so than ever now?
Well, absolutely. Probably most people don't know this, but while I was doing my master's courses in biology, I took a part-time job at a maximum security prison in the early 70s, and had the opportunity to meet the old school bank robbers. And nowadays, as things have evolved, the new school bank robbers could be anywhere in the world. And as a Schedule I bank, we feel we somewhat have a target on our backs. We attract a lot of attention from the nefarious people in the world. So definitely it's always on our mind, and we're always spending and investing and seeking out new methods to ensure that our bank and other FIs can stay safe. Like I say, this acquisition of DBG, they have a sort of a who's who customer list in North America, complement to the existing cybersecurity technology that we had developed in-house. So we're hoping that we can assist others, particularly in the FI industry, with what we've developed for ourselves.
Greg, on your end, in terms of security and privacy, and ensuring data privacy, has that been a growing area of concern for you over the last number of years, or has it always kind of been something top of mind?
Yeah, I mean, it's obviously always been something top of mind for us, and it's been an area of big investment. Again, as a public company, you're under even a higher degree of scrutiny as well, and these are areas you can't afford to not invest in. And obviously in financial services, where you're safekeeping your customers' data, it's a critical piece. So it's something that we continue to assess, and I'm interested in learning more, David, on your solution, and because we continue to assess best-in-class solutions and ways that we can continue to add and evolve our own security systems, because it is something that's never static. You have to continue to invest and evolve it. And then obviously on the consumer side, we think we're innovators there. Our ID fraud is as we say, it is effectively a certainty that all of our IDs are going to be stolen. It's just a matter of when, not if. The issue is, and there's really nothing you can do about that because our data sits on databases that we don't control, and not everybody's investing at the right level of in security. And so as a consumer, you need to protect your ID from fraud, and that's what our product does with a real-time push notification to your phone if there's any activity on your bureau, which is the first line of defense. And we think that we've made that used to be a $9 a month product. Now we've made it free. It's the only solution like that in Canada. We think every Canadian should have it. This is about stopping somebody from getting a mortgage or a loan in your name and you not finding out about it until it's too late. And then it'll take you a year to deal with that. So ID fraud and the impact it can make in your financial health is very real. And we're investing a lot of time and resources educating Canadians and trying to help them protect against that as well.
Are a lot of the solutions that you're finding, are they Canadian made or are they global made? Is that something maybe? Is there enough of that in Canada?
Yeah, I would say there's a mix. I mean, we work with Shopify is a partner of ours, obviously a Canadian company, and we work with other Canadian vendors as well. But we're always looking for best in class solutions, and we're obviously a lot of our partners are in the U.S. as well, but yeah, I would say we're seeing a lot of innovation in Canada as well. I mean, banking by definition is a lot more regional. It's not like e-commerce where you can just say, oh, I'm an e-commerce company in the U.S. Now I can sell in Canada. You have to run on the rails in Canada as well, and so a lot of times you need to work with local Canadian vendors that are built for the Canadian sector as well. So, we definitely work with a mix.
Maybe as we just kind of wrap up here, love to get both Greg, David, your thoughts on, where the next wave of Canada tech will be. Like, we've seen now FinTech is starting to grow, obviously, from both your perspectives. We're seeing a rise across Canada in terms of tech hubs. What do you see for a next wave? What will that momentum shift be? Do you think that people are now seeing yourselves, companies like Shopify, Lightspeed, this continuing evolution of Canadian tech companies building in Canada, staying in Canada? Do you think, that will continue forward? We also see sometimes a lot of companies will sell to bigger U.S. conglomerates. What would you hope for in the Canadian tech ecosystem going forward? Do you want more to stay in Canada? Do you want more Canadian dollars to be invested? Do you want the governments to invest more? What would your hopes be for the next 5 to 10 years and how we can help continue to grow what we've seen evolve over the last decade? Hey, David, I'll pass out to you for just some closing thoughts.
Sure. Well, I, as a Canadian, I'd love to see more grow in Canada. I think we have a wonderful country, a friendly, welcoming country, despite maybe the winters being a little brutal at times. So I'd love to see the tech industry in Canada continue to grow. I think with respect to impediments, over the years, and I guess I'm a pioneer in this industry, I faced tremendous opposition from governments and government regulations that just didn't seem to move along fast enough. Thinking back to the early years, I was lectured many times that folks really needed a physical premises to walk in to do their banking, and there's no way that they would do it digitally. And then, of course, time progressed, and then they were telling me that we were just lucky because we started to produce outlier type financial results, and the luck would end. And now they seem to think that there is maybe a room for FinTech companies in Canada. And I think even though they make noises to that effect, I think they have to have a hard look at the regulations and make sure that they're conducive to the growth of Canadian FinTech companies and not throw arbitrary barriers and red tape that slows us down. I'm not too worried about the capital side because capital seems to find worthwhile investments. It comes from all over the world. So I think growing a fintech industry in Canada and paying particular attention to eliminating the red tape regulation that has existed that's been my biggest impediment in the entire time since 1993. I never really thought that when I created this bank, that's what would be my opposition. And no trouble getting customers, no trouble getting the employees. I use the build it and they will come philosophy. In certain markets we've gone into, we've just dominated. However, I had massive opposition from governments all throughout Canada that just didn't seem to get it. So that's the one message I'd like to leave. If you really want to have a booming fintech industry in Canada, governments need to have a hard look at the regulations and evolve them along with the industry.
Greg, just last thoughts before we quickly wrap up?
Yeah, I mean, I think, look, we've had a lot of Canadian successes. You saw, again, Slack getting acquired by Salesforce, Verifin in Newfoundland getting acquired by NASDAQ. So there's a lot of, great technology companies being built world-class in Canada. But, I also agree with David that, as it relates to financial services and FinTech, if we don't support homegrown fintechs and help Canadian companies evolve the digital experience and be the winners alongside where the new digital banking is going, then what's going to happen is the exact same thing that happened in, as I say, in media or retail, where all of those dollars, those profits, those jobs flow to Google, Facebook, Amazon, and consumer banking. Absolutely, those dollars can flow to Apple, Facebook, Amazon, etc. if we are not building and supporting our own homegrown companies, because the digital transformation is going to happen no matter what. Consumers are demanding it. And global players are investing a lot of money in this to own that, and it's important that Canada supports Canadian companies so that we keep that innovation, those jobs, and that capital in Canada.
Awesome, great last point there, Greg. Appreciate it. David, Greg, I want to thank you very much for joining us this morning, and hopefully everybody got a bit of a better sense of what's going on in Canada in terms of the growth of the fintech industry and ecosystem. Next up is a discussion presented by the FinTech Growth Syndicate on AI and alternative data. I want to thank everyone for joining us this morning.
Thank you.
My pleasure. Thank you.
Hello, everyone, and welcome to the FinTech Festival in Canada. I am Mark Reisler. I will be your moderator for this panel discussion. I am here representing FinTech Growth Syndicate, and looking really forward to today to discussing the topic around AI and alternative data, the use cases in finance, how they're being applied, some of the hard truths around AI and alternative data in particular, and a special area on fraud in particular. We have a phenomenal panel that we put together for you today. But before we get into them, I'd like to just share my screen really quickly and introduce us. So I'll do that right now, and hopefully everybody can see the screen. Okay. And on our panel for today, we have myself, Jennifer Arnold, who's the CEO and co-founder of Minerva AI, Luis Gonzalez, the managing director of APAC for Element AI, and Salon Angel, who is the founder and chief impact officer for MindBridge. Just really quickly, a quick overview on FGS. We are the among Canada's top 50 fastest growing companies. We won the FinTech Advisory Firm of the Year last year and the Entrepreneur and the Women in IT Awards. We've worked with a variety of different companies across Canada, US, and parts of the globe around FinTech innovation, and in particular, growth strategy. So on that note, what I'd like to do right now is turn it over to Jennifer. Jennifer, we'd love to hear from you. Please introduce yourself. Welcome to the panel discussion.
Sure. Hi, everyone. My name is Jennifer Arnold, and I'm the CEO of Minerva AI. Minerva AI is intelligent automation for financial crime, specifically that leg of work that we refer to as enhanced due diligence. So everything from sanctions and PEP screening to social media and adverse media analysis. That's our sweet spot. I come at this from a regulatory perspective. I'm a major anti-money laundering nerd. That's my background, and that's been my bread and butter for the last many years. So that's a little bit about us. Thanks.
Perfect. Thank you, Jennifer. Looking forward to your insights today. Luis, you wanna tell us a little bit about yourself, a little bit about Element?
Sure. Thank you, Mark. My name is Luis Gonzalez. I'm from Element AI. I convinced and founded the business here in Asia. Just think of it as a startup within the startup. In principle, Element AI Asia has two key verticals we've grown. One is being financials, and the other one's been manufacturing. My background is in software engineering and business, and I was running GE Digital in Asia before coming over. So obviously, I'm more of an industrial guy, and I apologize if I don't know the domain enough of financials, but what we've done at the end is to try to influence the idea of governing AI within financial institutions, and we've partnered with the Monetary Authority of Singapore in a project for the last year and a half on this. Thank you for having me.
And I was speaking to Luis just prepping for this event, and he knows a thing or two about finance. So don't let him fool you too quickly.
That's one of my favorite pastimes. Yeah.
And thank you. Welcome. Looking forward to your insights as well. And Salon, do you want to introduce yourself and MindBridge, a little bit about MindBridge?
Thank you. Well, thank you for having us today. So MindBridge is actually a past recipient, finalist of the hackathon at the global hackathon of the Singapore FinTech Festival last year. We're also a recipient of the World Economic Forum Technology Pioneer Award, and myself, I'm a top 100 influencer in accounting. And what we do is we're trying to create a better future for everyone by improving the global financial system, one organization at a time, by bringing light to risk around unintentional errors, mistakes people do in the books of companies and government, and fraud in all the data where financial data sits, in a way that finance professionals and compliance professionals can understand quickly what happens without any coding required. And so what we do is essentially try to turn, for example, professions such as auditors into AI auditors. That's how we call them, professionals enhanced with AI. Our claim to fame is that we actually were using in investigations already where an AI, provided evidence to find the world's first white-collar criminal and put him behind bars with just an AI. And funny enough, it was an accountant.
Yeah, is that funny, or is that?
It's very interesting. It's very interesting.
It absolutely is. So you can see we've assembled a phenomenal panel here. The way that we're going to break this down is what we've discussed is breaking this into a couple of sections where we'll talk about some hard truths for 15 minutes or so, and then we'll get into AI and some of the use cases of alternative data and AI in the financial ecosystem. And then we'll talk a little bit at the end around the use cases around fraud in particular, and how to combat fraud in that sense. And as we go through this, feel free to ask your questions along the way. I'll try my best to incorporate the questions in the dialogue and in the conversation we're about to have here. So thank you again for TFI, for Ontario, for SFF, for putting on this event. Let's jump into it. So we blended two really big topics together, the idea behind artificial intelligence and alt data. I want to clear the air and I want to set some clear definitions and kind of guardrails about these two distinct topics. So Jennifer, why don't we kick it off with you? Can you just explain AI versus alt data, and give a use case of perhaps how to separate them in our minds, so that we have that frame as we talk about some of the use cases as we move down in the conversation?
Sure. So for our perspective, alt data is just one form of data that we consume, or that Minerva consumes in doing the job that she does. If data is the gas, regardless of where the data is coming from, then AI is the car. That's how we look at it. So in the world of anti-money laundering and financial crime, when we talk about alt data, we're looking at things like social and sentiment. We're looking at adverse media. We're looking at pulling in from open source and ICIJ and validated data leaks and items like that. So really for us, it's just a form of fuel or food for Minerva to do her job.
That's great. Salon, same definition, no difference. It's a form of fuel. You agree with that?
To some extent, yes.
Okay. What's the difference?
I think if you think about AI and data, there's certain, and I'll go there later on. We talk about ethics, but like this is a case where the fuel modifies the engine sometimes, right? Like, so you have situations where I would call it more almost like the best way to describe it is mutating genes, and depending on the body you put into, they will alter the body different ways. So if you remember the island of Dr. Moreau, where you have a bunch of experiments being done, that's a bit like the industry feels today to me, where people put data to the same algorithms and have completely different outcome. It's not a static. There is an element of driver versus fuel, but it's much more dynamic and sometimes much more unplanned as an outcome. Like, for example, when we've seen an AI by a big tech company in the US qualifying people of monkey just because they were Afro-Americans.
Right. So we have the distinction between AI, alt data fueling or fueling the engine of AI, but it also is able to alternate and adjust the modifications within that AI algorithm. Luis, would love to hear from you on this as well in regards to how you separate the two.
Well, so data is a very broad term, and to be fair, for the purpose of actual AI engineering, a little useless, because what matters about data is really the signals they represent, and those learnings really are the ones that set up your right balance with the hyperparameters that you're going to do to be able to do the prediction or the correlation you're looking for. So inference modeling really requires that you understand what data represents, and then we get into very interesting exercises where, for instance, now we're working with a bank, and the bank doesn't want to share their data, but through synthetic data creation, we can model really the inferences we're looking for, the signals that help the inferences we're looking for, which means that it's much more the study of what it represents than the actual integrity of it. And it's also the continuum. Sometimes the metadata is more useful than data, depending on what you're looking at. So this is where data science meets let's just say that data science is the refining of the fuel. And the more you learn about how you refine it, the better you can build models around it. Sometimes you can get into things like building models that calibrate their inference based on active learning, so that even if you don't have data, you have the absence of data, you can start building an inference model that can transfer from humans to the machine rather than pure data-based, right? So it's a more complex problem for sure, and it's in the best experience that we've seen is engineering of AI requires that we go beyond the current concepts of what data really is.
I love it. 3 different perspectives. This is going to be a great panel discussion. I want to get a little deeper now. And you mentioned ethics, Salon. So we have some clear definitions about AI, alt data, engineering behind AI, the fuel behind it. But let's dig into the ethical questions so that we have a clear frame of mind as we move on to more of the deeper conversations. I'd love to hear your opinion, and Salon, why don't we kick it off with you around some of the big ethical issues around AI. So I'll kick it off by just saying, who should audit the actual AI creators? And Salon, why don't you kick us off with that?
Well, that's a great question, because if you think about homes today, there's home inspectors. If you think about safety boards for the automotive industry, they are created and financed sometimes by government. And because this is a new field, this is still shaping up. We're very lucky out of Canada. The government of Canada created their own algorithmic impact assessment tool. And they've worked very closely with industry to guide industry and have those panel and discussions. And other players such as MyBridge and MetAI contributed to it. So we are in the early stage formation of those bodies of inspections, of peer reviews, of sharing, and also the open source community. You know, when we started looking at some of the algorithms around financial flows, we were able to contribute and learn back and forth without even meeting the people sometimes. But the problem that comes in is beyond a single country, beyond a single organization, that the data and the bias in AI is just reflective of humans' bias. And there's over 99 cognitive deficiencies in humans that are all known and well listed. One of it is called the IKEA effect, where people put more value to what they do themselves, which is why sometimes you run into an IT department that says, we're going to do it ourselves and it's going to be better than the vendor, and then the outcome is rarely better. So in the cultural aspect as well, there's bias, for example, around age, around races, but also around positions. So if you are someone that works on autonomous vehicles right now, you're presented with the challenge, what do you do if brakes don't work anymore? The car is going at high speed and there's two pedestrians on the road. One is an elderly, old woman, the other one is a young kid. And the AI has to decide if you crash the car and kill the passenger, hit the grandma, or hit the kid. And what's fascinating when you ask that question to AI engineers, whether they're from the Western, Eastern, or Southern cultures, they have three different answers. So when you build AI system, that ability to have diversity in AI, to have those peer review mechanisms and those boards where discussions happen, and have the ability to some extent of, you know, vendors and IT departments collaborate very openly. Like, we are very known to be extremely transparent with some of our largest clients, which have access to our code and review our algorithms and rebuild and re-engineer them before they put them in production. That level of collaboration is the future.
Right. So Jen, I want to ask you about the same question in regards to auditing AI, but at the same time, like you built Minerva, and she's looking at this from an AML perspective and going through hundreds of thousands of records to try and figure out, you know, where fraud might actually be. But how do you navigate the bias in Minerva and her ability to make decisions?
So I think I want to tackle a couple of things there. And I think what Salon was saying about diversity and representation is critical. And also, you know, for Minerva, she's very specific in her use case or in her purpose, right? Which is she is financial crime driven, largely anti-money laundering, and unlike fraud, which is binary in many ways, right? It either is you or is not you conducting that transaction on your credit card, where with money laundering, the answer is always maybe I need to know more. I need to understand the context to understand what this client is up to, whether that's a person or an entity. So with Minerva, we started, like 2 years ago, when we started labeling and training our data sets. It was anti-money laundering experts in the room helping with the categorization, and then being able to review one another's work. So it doesn't pass through a single set of hands in the beginning. You're getting a really diverse and fulsome review of the content and categorization before you let it loose into Minerva for consumption or ingestion in any way.
Right. And Louise, the last question is for you here. So we've talked a little bit about the audit. We've talked a little bit about the navigating the biases. I want to talk about consumers and the end users, the citizens who will be using the tools at the end of the day, or the tool is here to protect us at the end of the day. How do we keep AI safe and in control? Would love your thoughts on this.
Yeah, and I think it plays nicely into how you regulate it as well, because AI requires a significant amount of engineering being created. If you go back to the history of chemicals, chemical engineering was built after a plant in Germany blew up a whole city. And it was found that you needed standards and parameters that control the outcome of this technology that was brand new at the time. So similarly, AI requires heavy engineering standards. Because in my view, the regulator put the fact that you need to explain fairness in your model as part of model management before you put it in production. But then provocatively, you could say that it is okay to disadvantage certain people, right? If you're a bank that focuses on high earning, low risk profile, there's no need to change your business model just because you want to have access to low income household, right? So there are justifications that are like someone says, very contextual to not just the country, actually to the individual business model of the bank. But you have to have the governance to be able to explain why you're doing this from a business standpoint, and that the disadvantaging is purposeful rather than unintended, right? So in my view, the combination of standards of AI engineering with a responsible regulator providing guidelines as to how things should be done, the awareness of customers that the only way that this is going to work for banks is to build trust, because that's the business of a bank, right? So if I can trust what the bank does with AI and they can explain it and they can be transparent about it, and I know that the inference models being built towards accepting my credit or giving me a loan or under my risk are actually be done with responsibility. Similar to if you were to buy chemicals today, that BAS goes through ISO hundreds of certifications before they reach your home. So to me, that's the best way to think about it.
Okay, so sorry. It seems like we landed on a couple of key pillars here, and we're building the story as we go along here. Key pillars around the ethics of AI: diversity, peer-reviewed, collaboration, expertise, and some form of regulation. Would we all agree on that?
Yes, and not forgetting that the humans and the professional judgment of humans cannot be supplemented sometimes. So if you put always a human before anything happens, and you design everything with human, at the loop. So for example, MindBridge will provide all evidence of a case of misconduct or of an error, right, of fraud, to before a human reviews it. And as long as you keep that in perspective, you can, compensate for a lot of things that are maybe not ready.
Yeah, so the element of human review as well. Okay, we're going to touch on these as we go through some of the topics right now. I wanted to move into our next area of conversation, excuse me, which is AI and its use cases in the financial system. So at FGS, we've mapped over 110 unique AI and alt data, excuse me, companies across a variety of different functions in the financial ecosystem. Whether the AI is tackling problems from process, conversational commerce, decisioning, AI and alt data, it's really accelerated in Canada. We've seen massive growth over the past few years. So let's talk about some of the use cases in which we've seen. How I'd like to do this is I'll name a few financial services functions. Think of AI and InsurTech, AI and RegTech. And what I'd love to do is just talk a little bit about the use cases in which we see AI impacting the payments industry. So Luis, why don't I kick it off with you, where let's talk about Paytex. Let's talk about how AI could actually influence some of the Paytex that and the payments industry in general.
Well, I mean, maybe I'll take it from the Asian background to maybe shed some light or something different than maybe in Canada. But Paytech, especially in Southeast Asia, is not just about secure payment. It's really about first form of financing that a lot of underprivileged poor people that are unbanked first get to touch and interact with. And to be fair, electronic payments have become a way also to control crime, because electronic cash makes it a lot harder to transact that way. And if we look at the model that China has brought to Southeast Asia, for example, I think it's really a form of advancing financial relationships with unprivileged population. And it's not meaningless in the sense that if you count the amount of unbanked people in Southeast Asia alone, you're close to 500 million people. So for us, Paytech really is a milestone of security and and economic transfer that is a little bit more regulated and safe, right? So it creates a very different paradigm than just purely the convenience aspect of it that perhaps see more in North America.
Yeah, that's great, and it's thank you for that perspective as well. Salon, Jen, any examples or ideas that you have top of mind around AI and PayTech?
Of course. So if you Google, go ahead, maybe Jennifer first.
Oh, no, sorry. No, your of course answer is exactly what I was thinking. And I mean, again, from this perspective, we're just talking about, just look at it from, make sure you know who you're doing business with at a very deep level, especially when money can move that fast and move that fast across borders.
Absolutely. And actually, I think doing digital payments in the 21st century without AI is madness. So if you consider that analog payments, several payments, clearinghouse and agencies have been modernizing, including in Canada. And if you go Google about the projects with Bank of Canada and them, you'll see the main thing that people don't appreciate is that in the past, there was only a handful of fields per transactions. If you look with an ATM, you have date, time, amount, and that's about it. You have those massive databases of 3-4 fields. When you do digital payments, you have dozens of fields, right? Mm-hmm. And when you talk about due diligence or know your customers' problems, what about the situations when you have hidden players through other platforms? For example, 5 years ago, I was exposed to a case of a pedophile network using games on the Apple Store with credits to pass credits from one country to another. That's like completely a complete misuse of those platforms. And at the time, Apple didn't even have a compliance department looking into that. And it was the law enforcement community that brought that to our attention. So these situations like that, where you just don't have the human capacity anymore in the world. The way I say it, in the space where we are, the Jedis need lightsabers. Like, you can have all the compliance professionals that you want. You can have all the auditors and risk managers that you want. It's Jedi's of the Force, but if they don't have lightsabers, at some point they can't see and do something about it, right? Or maybe they don't have the Force. But that's, to me, AI is that capacity that we desperately need in some areas. And I can go on a long time about stocks that are overvalued just by looking at their financials. And that's another topic. But like, the payment space, it's really it's a must. It's in the digital payment world, AI first is definitely the prerogative.
Yeah, I couldn't agree more. In the payment space, especially in Canada, we're revolutionizing our payments modernization process here, and it's actually leading to a lot of conversations around the use of data and how AI will actually be a part of advancing the payment infrastructure system forward. So it's becoming very popular. We're seeing a lot of startups enter into the AI and payment space. I think about the rise of, and this could be part of lending as well, but the rise of buy now, pay later. I mean, this global phenomenon of, having the ability to pay at the point of purchase and then amortizing those payments across a point of time and creating the conversational commerce that needs to actually happen in order to keep that person engaged in the payment methodology as well as informed in the payment processing stages. So this is a perfect use case around AI and payments. I want to move over to another big area that's formulating in Canada and around the world, and you touched on it before, Salon, is you looked at the stock market and you said, I could tell just by looking at the data, X, Y, and Z, and this is wealth tech. So artificial intelligence and wealth tech, we have some very big companies in Canada that have reached unicorn status. Wealthsimple comes to mind in this area in regards to wealth management and the use of artificial intelligence in it. Would love to hear some use cases from you guys on this. Jen, why don't I start with you, and we'll go through the panel.
Well, if we stay with, I think, the example of Wealthsimple, and again, this for me, I'm not an engineer. I'm a policy wonk, so that's where I'm going to tackle this from. When I look at Wealthsimple and I look at their crypto business, so by definition, they're high risk, and everyone who touches that book of business is high risk. So how are you doing your onboarding? How are you doing your enhanced due diligence? And how often are you repeating that EDD process to make sure you have a beat on your customer over time? And then what does that cycle look like? Like, are people there for a long time, a short time? What are you doing in the way of behavioral analytics in terms of what you expect someone to do on your platform versus what they're actually doing on the platform? How are you detecting that? And then how are you running that down?
I agree completely. Well, so I was probably one of the first customers of Wealthsimple for crypto. I've been doing it for a couple of weeks now, but
I'm going to hear Minerva now.
So it's fascinating to me because when you see what you see with Wealthsimple is that AI first, robot advisor first principle, and during the crisis, they've outperformed some of the biggest fund managers, right? During the crisis at the beginning of this year. And I think that speaks volume about having a more scientific approach versus relying so much on human professional judgment in the decisions. And what I found very interesting, not just with Wealthsimple, but how pioneers are always held to a higher standard than what is done. So for example, I'm part of a group of founders called Fresh Founders, where it's 100 founders that help each other. And one of the founders created the world's first Bitcoin ATM years ago out of Y Combinator. And you should see the due diligence they do. They even had cameras on the terminals and stuff, was way higher than any other ATM in the world. But somehow they had 10 times more scrutiny than the largest bank's network. And so I think that's a very stressful time for innovators when people are putting higher standards. But you know what? That's the way it should be. It's great because it makes the whole profession move forward with a higher level of due diligence, a higher level of sensitivity to those issues. So I think it's a great thing to embrace. But in the space of wealth tech, we're just at the beginning of what's possible. There's really a lot more work. There's a lot more markets and capital markets that could benefit from a more scientific approach to due diligence, but also to decisions of investments on the asset management side.
I think that scrutiny that you're speaking of is only going to increase, especially for anybody in fintech, crypto, and neobank space, because from the interviews and conversations that I've had with folks in that space, everyone's kind of skating by the seat of their pants when it comes to compliance with their anti-money laundering regulations. You know, the goal is to grow and grow fast and acquire customers. So no one's really interested in diverting funds from the growth engine to build out a compliance team. Totally fair. But that scrutiny is only going to continue to increase and get, I think, more harsh and more brutal. And I think we'll start to see fines relatively soon.
Yeah, and in this space, especially, you know, what kind of comes to mind is what happened with Robinhood, and you know, we can't go through a panel conversation in 2020 without mentioning COVID. So we have to talk a little bit about COVID and what happened down south in the U.S. in regards to Robinhood. And I remember the story of you know, this 20-year-old who was getting their checks from the government and investing it into Robinhood and the automated platform, and then a breach happened or something along those lines, and he now had to pay or lost, you know, $50,000 or $100,000 of his savings that he originally had invested into there. So this is an example around, you know, some of the watch outs behind that. Luis, do you have an opinion or some use cases around wealth tech that you've been seeing in Southeast Asia and some of the work that Element's done?
We've been lucky enough to work with the wealth fund here in Singapore, and to be very frank, there's a lot of things that are starting to see. I see a democratization of insights, which means that actually forget about advisors. The idea is you would create your own personal, you know, assistant or investor, virtual investor based on your priorities, and it will do the digestion of some of these insights that today, to be fair, is really hard to get. that get democratized. And then I think that underwriting a stock to be able to really understand the risk, it's evolving so much that I think that our models of understanding volatility are outdated. And this is not something that I came up myself. I hear people, very sophisticated investors of 20 years here in Singapore, saying, I don't think we know how to measure true risk of the market anymore.
Exactly.
Because the behavior of the market is so different. Robinhood is a great little snippet. As we were talking before we got in the call, when you have a digital generation between China and India joining the market and betting or shorting something in NASDAQ, their power to pump or completely reshape the behavior of the market. It's funny because again, I think we're in a bubble. Yeah, how can we tell? How about we're in a bear market? How about we're in a bull market? At the end of the day, the dynamics have changed so much that technology is going a lot faster than the ability to understand their impact. So for me, wealth tech is one of the biggest growing areas that none of us really can tell where it's going to end, but it's very exciting. Of all the observations I have in financials, for me, wealth tech and anti-money laundering are the two most exciting things.
And we at MyBridge, what we're obsessed about is how much risk there is at all times. Like what we started is the world's first automated risk assessment platform. And wealth creation only goes so far if you have no idea of the risk inherent in every position you take. And I always like to remind to everyone that Terranos sounded great. $700 million raised, sounded a phenomenal technology. And at no time, anyone had a financial audited statement produced and had an idea of the risk inherent in the revenue recognition. And those are the challenges of the 21st century. And my fear, and if you ever talk to Harry Markopoulos, the whistleblower on the Bernie Madoff case, him and me exchanged very passionately on this topic on many venues. And he wrote a book called No One Would Listen. I invite everyone to read it because nothing has changed since Bernie Madoff in the global capital markets.
Yeah.
Yeah, that's a statement and a great book to read as well. I haven't read it, but I've heard it's on the to-do list for sure. I want to talk about
transparency up to wealth tech. It's going to be a whole booming aspect of thought leadership and new startups because it's needed on the way trades are made. A higher level of accountability in how trades are made.
Yeah, I couldn't agree more. Luis, I couldn't agree more. I wanted to talk about one additional FinTech area sector, which is the lending sector, and in combination, it could be the personal financial management sector as well. And this is where we're starting to see a lot of growth. We've seen over the last 10 years in Canada, in particular, 111 companies come into this sector, of which 50 or so are AI and alternative data driven. And this is a big sector. And where we're seeing a lot of fintechs entering is in regarding the decisioning from the lending value chain perspective. And we talked previously when we discussed the ethics behind decisioning. But I really want to touch on, how do we remove bias in decisioning? How do we make sure that Joe Smith, who looks very similar to these 20,000 other people, deserves the same chance of getting this loan as Jane Doe, who looks like 20,000 other people that has a little bit better credit? How do we remove this decisioning, this decision bias that's present in today's world in regarding credit evaluation and underwriting, and start to leverage the use cases of AI to help us here? Solon, why don't you kick us off here and chat about your experience here?
Sure. So I'll start with what I think is the biggest opportunity, and then what are the things that we need to be cognizant that can be holding us back as an industry. The biggest opportunity is on the infrastructure. The data connectors and the data fusion happening between banks data and accounting data, for example, have created things like QuickBooks Capital. Right, so often when you have a software vendor of accounting software that is providing, cash advances, and same with Shopify Capital, using data science at the front and center of everything they do, and just relating one data set to another, having a whole different level of due diligence done automatically with almost no human involved. Have a look at ClearBank, right? Connecting to Google Analytics and your Stripe account, and all of a sudden they're able to really mitigate risk and take incredible position. And it's a win-win for the entrepreneurs and for ClearBank and their backers, right? So those are the incredible opportunities of our time, and that has not hit Main Street businesses yet.
No.
And that's,
why do you think it hasn't?
It's just a matter of time. It's just a matter of
Is
time.
it a matter of time, or is it a matter of legacy system infrastructure updates? You know, the typical excuses that that we hear from big banks.
So I'll share the story of the anti-brake system. Very few people know, but the ABS system that every car has today was invented in the 19th century. The first electronic ABS system was used in the 70s on the Concorde to stop that high-speed plane from landing too far, right? And then most cars in the 90s were sold with ABS, but it's only in 2004 that the legacy regulators made it a mandatory requirement that every new car, you know, has to have ABS. Think about it. It took 100 years for something that saves lives. In this case, having the ability to deploy capital fast and to the right person, save businesses, save jobs in some situation, and create jobs. And the beautiful thing is that this is happening in years, not 100 years. We now have a pace of innovation and discussion, especially I see from banks and IT leaders in banking, they're not as reticent or resisting change as people assume they are. In fact, a lot of them are very curious and very willing to experiment. That has been our experience with this. Things have changed a lot in the last 5 years. The real risk comes from the misperception on what I called earlier, holding pioneers to a too high level compared to others. The first case of discrimination in banking was in the US, where they used algorithms for lending. And then they basically realized that because of bias in data, they were lending less often to minorities. The bank got fined, got caught years after unfortunately hundreds of cases, right? But guess what? People said, well, you see, the AI is not as good as a human for that. But wait a second. There was countless cases at the counter of discrimination on Afro-Americans, and you can't pose, like with an AI system, you can pose, go back in the data, do a forensic evaluation of what happened with the algorithms, and then correct that and prove when there was wrongdoing done. When a human at the counter and there's no one watching does those decisions, how do you do that? You can't rewind back in time, open the skull of someone and the brain of the teller and say that they did discrimination. So there's abilities, there's opportunities all over. There's opportunities to do a better job. There's opportunity to help more people. And at the center of that, AI is essentially opening those opportunities.
So sorry, Mark. I think there's another point buried in there, and that is around the regulators, especially when it comes to the banking industry. They are not comfortable with taking a human out of the loop. So, you know, our job there is to have AI that assists the human until they get to a place where they're comfortable where you can pull the human out of the loop. But it's like you got to boil that frog slowly when it comes to the regulators, or they'll jump out of the pen.
And that's fine. Yeah. And I think there should be always an element of override. Even in the world where you have Teslas in level 5 autonomy, or you have a helicopter that autonomously dropping people from one rooftop to another, there should be a button where you can still take the handles in case of malfunction. I think that should always be there. And as long as we're not trusting the machines enough, I think we should stay in control of it.
Mm-hmm. I wanted to add this one thing on a different approach of lending potential, because I see a lot of non-financial based lenders coming in because they have better data to underwrite. And for example, in Thailand, these are places that are blessed with very rich data, even though they don't do much with it yet. You start seeing things like peer-to-peer lending and microstructured lending. This means a third party pays my bill for me, and I now have a construct between me and that third party, which both of us are not institutions at all. So when you have network-based like that, or peer-to-peer lending, for example, or micro loans that are now between organizations that have never been financial organizations before, it escapes some regulators in Asia how to best regulate that, and because it happens a lot on the underprivileged population, there, I micro lend you $20. And then you pay me next week, $11 out of that. Regulating that and stopping the use of the technology for that purpose is actually being very difficult. So In my view, the biggest growth of lending won't happen in the financials because underwriting models for risk, the data is richer elsewhere. You know, if, for example,
Yep.
if I have a relationship with iPhone, I'm 17 right now, and I've had an iPhone since I was 11. They know me so well that when it comes time to buy a mortgage, why would I buy it with a bank? They can underwrite me from when I was 11. They know exactly who I am and how I behave. It's a great proposition that I use to scare bankers, like I say. And maybe I'm wrong, but I still haven't had a good answer from any banker telling me otherwise.
Yeah, Apple is the new bank.
Good, and you know, there's this attitude that we will buy the startups. Okay, good luck buying Apple, right? So that's the whole point, is that I think lending is one of those great green areas where you'll have another suite of entrants that are not playing by the financial rules, right?
Yep, I couldn't agree more. My philosophy behind this and overall belief is every firm could be a lender at the end of the day. You know, you're thinking about lending to the SMB segment, the small medium business segment, and you're a supplier or a manufacturer of goods to that consumer or that small business. The data that you have on that small business is proprietary data. That's data that banks, you know, wish that they had to understand the level of price and product construct that they should be selling to or providing to that business that's learning from you or that wants the loan from you. So I mean, I couldn't agree with you more.
Right. So now you can have a circle of business. It's fascinating what can be done.
Yeah, I couldn't agree more. Okay, I want to get in. I want to get into our last segment here for the last couple of minutes, and it's a good segue when we talk about lending, because there's a lot of due diligence that needs to happen in order to know your customer, to ensure anti-money laundering and anti-terrorist financing and combating criminal crime and fraud, et cetera. So earlier this year, PwC did a great study, a global study on financial services. Overall, they saw fraud increase in 10 of the 13 categories of fraud that they surveyed, of which the top 4 are customer fraud, asset misappropriation, cybercrime, bribery, and corruption. Not hugely, hopefully everybody can still hear me. And where we went to from there is Canada's been spending a lot of time combating the idea behind fraud, behind anti-money laundering and anti-terrorist financing. So we're lucky to have Jennifer, Salon, and Luis here to chat with us about this because they are experts in this area. And I'm hoping that, Jennifer, we could start with you here. And what I want to do is just talk about some of the big use cases that we've seen in around due diligence, enhanced due diligence, know your customer, anti-money laundering. I'd love to kick it off with you.
Sure, thank you. I want to go back to a metaphor that Salon provided us with earlier, which was actually brilliant, which is the Jedis need lightsabers. And so if we look at a large financial institution and they have 300 plus investigators on staff doing their job, the folks being tasked with actually identifying and stopping financial crime, they haven't had a major upgrade in almost 2 decades. They have no lightsabers. They have tape and like they've got no tools to do their job faster and better. They've got nothing to facilitate better risk decisions being made in a more timely manner. You know, they sit on backlogs of cases that go uninvestigated because they can't stay on top of the work. So when I think about RegTech and when I think about Minerva specifically, being able to accelerate that investigation process so your FI is no longer sitting on a backlog of cases so that you could move into an almost real-time existence when it came to examining alerts in cases, being able to take data from that deep contextual data on your client, feeding it into your alerting tool to reduce the noise on stuff that's coming back to you. There's so many things that can be done in that space. And really, it's about education and getting FIs comfortable and letting them have the human in the loop for now to get them used to the idea of the process that an AI can go out and collect, aggregate all of the data that they need to satisfy the regulator, provide some risk analysis on that information, do sentiment and context and risk, and be able to give the investigator something to work with, give them back precious hours to do investigation and analysis instead of sucking their lives away by Google searching John Smith plus money laundering, because that is an insane way to do this work.
Mm-hmm. And just one quick follow-up question there. So, Jen, you used to be a banker, right? Like you used to be in the space, I think.
Yeah, I was at Wells and over at CIBC as a head of AML transformation.
Right. So you actually know that inside of these organizations, that's what they're doing. They're actually Googling person's name plus whatever kind of suffix that they want to Google there in order to aggregate the information. So what you're saying is that there's a secret sauce that AI has here, or that AI can do by bringing multiple data sources together to streamline the efficiency of going through that fraud file.
Yeah, and it's a beautiful recipe, right? Where you're getting back more relevant information that's highly accurate, that provides like a productivity gain like nothing that you've ever seen, as well as being able to, make your regulator happy with highly compliant documentation that you did everything that you were supposed to do when you went through the vetting process with this client.
Yeah, and what you're seeing is does this actually lower the crime rate in regards to fraud for a bank? Like, are we seeing that? And just kind of walk me through like the value, the end state value that an organization would see at the end of the day here.
Well, I'll give you a real example from an institution that I will not name. But again, 300 plus investigators getting through a half a case to one case a day, facing 50,000 cases or more in a year.
Wow.
You're never going to be on top of your work. You're never going to find Jeffrey Epstein until years later, because you just can't get on top of that stuff. So being able to execute a single investigator to be able to get through 5 to 10 cases a day is a really meaningful gain. And whether you choose to take that gain as a reduction in headcount or an increase in capacity so that your organization can actually work with its revenue generating partners, get new product and service to market faster, or cover from a transaction monitoring perspective more products and services that you have not currently onboarded into that system, those are meaningful gains, both from a compliance perspective, but also from a productivity and cost management perspective. Those things go hand in hand.
Yeah, I think I get it now. Salon, what about from you? I'd love for you to just explain kind of the big use cases that you see in AI and alt data to combat fraud.
So the best way so very similar to what Jennifer just explained is when you have humans that have limited capacity, like think about, take the case of Wirecard, right? It's the prime I call of small data, big problems, or big data, many small problems that aggregate to a massive problem. And humans don't have limited cognitive capabilities and time. In the case of an auditor, right, if you think about it, you will need an army of accountants to look after an army of people doing fraud, but you don't. Yeah. Usually when there's an audit, there's a small team of audit looking after the whole organization. So the problem that we had to solve by creating those legions of AI auditors is to empower very quickly everyone with the force lightsabers and nukes to have the ability to very quickly. So the best way I can describe it is when you talk to the clients of our clients, they say, for example, that the AI auditors ask more relevant questions when they start using our software, and they can feel the qualitative aspect of AI, which is invisible. And so when you think about, you're going to see in Canada, one of the 5 largest accounting firms soon is going to do a press release. They're going MindBridge all over, and they say they're going to reallocate the resources towards growth of the time they're saving by doing a better job with less risk inside their services. So the problem of also small data, big problem, if you look at the proof of concept and the written reports by Bank of England on their test with MindBridge, they talk about that problem where when you have very small data sets and there's one line that is the problem and you have very little context, no humans can solve that problem. This is where a highly sensitive AI can, with a very accurate ability to do anomaly detection. Those are the real life problems that we can address by really quickly honing on where the fraud could be, on where, not even fraud, what's just interest. right? And so the most useful AIs are the AIs like, for example, when we talk about Minerva or MindBridge or some of the project MLTI does, is AIs that can relate at scale things that humans don't have time to do, right? Mm-hmm. If you have AIs that can automate that and relate data sets, relate sources very quickly using best practices, without even applying anomaly detection, but just digitizing the human cognitive process, you get incredible value. We're talking like dramatic reduction of friction, much faster investigation, and honing onto the problem super fast.
Mm-hmm. Luis, what have you noticed globally in this fraud space? So, we have some great examples from Canada that Salon and Jennifer were talking about and entering into Europe. But what have you really noticed from a global perspective in fraud?
So our approach really, we're not a banking domain firm, therefore we never really sought out to solve the problem in anti-money laundering. But at the end of the day, anti-money laundering is similar to a cybersecurity problem, which is really a problem of intelligence and sheer volume, right? Detecting the false positives for the real positives quickly. So we used technology, deep learning based technology that allows you to go a lot stronger, a lot quicker on regards to inference detection and anomaly detection, especially temporal anomaly detection, which that meant being able to identify the behavior of the things that we know and we don't know. Now, our purpose was at the end to provide transparency to the inferences that models could be used. So even existing AML models need transparency, right? What is that explainability of those models and why they're identifying those as positive? And sure enough, once you provide explainability around these inferences, you actually find a lot of black holes, things that the inference is not reliable. And we stumble on that as a great source for money laundering. Why? Because money laundering will hide where inference models exist. And when you think of accountability and transparency put together in a bank, obviously some of the designs of how to do money laundering come from ex-bankers, people that understand how to avoid scrutiny, right? So when you apply this technology to finding abnormal behavior of transactions in a manner that you can do it in the millions or billions per minute, for example, then it's not that you have an explanation as to why it's anomalous, but the fact that you have an area that is very anomalous that no one's looking at already starts guiding to an elimination process that gets you to anomaly detection. So I think that the rules of anti-money laundering are going to change because the technology is going to start shedding the light on a lot of other things that haven't been put out to the regulator, and the regulator is going to start having tools to perhaps put better frameworks around not chasing what is being found, but more importantly, chasing what has been hidden, right? And that's right. One of the trends we've seen here in Singapore is that the monetary authority Singapore is being very proactive at driving these FEED principles because they have a great potential for things like this one.
Right. So I mean, if I could just summarize that really quickly, it sounds like the fact that this is a machine problem to solve in first, and then human intervention to look at the most critical cases afterwards. And it's a perfect example of how MindBridge and Minerva and some of the use cases that you were talking about, Luis, are utilizing data and AI to get ahead, to create efficiencies, and also to combat this fraud case. So I want to encourage everybody that's listening right now to ask questions as much as possible. We got 3 minutes left. I'm going to move into a rapid fire section, and if there are any questions, we'll bring them up as they come. But rapid fire, Salon, we'll start with you. Where's your big bet in finance and AI?
Yeah, I would say really in data fusion, in having the ability to fuse data sets that today don't talk to each other, and using AI as the link between the two.
Okay. Jen, what about yourself?
Not so different from Salon, the more robust use of contextual data to understand a client and a client's behavior compared to their own behavior over time as a form of anomaly detection.
Okay. And Luis?
I think along the lines of what they said, but I would go as to tell everyone, learn about federated learning and encrypted data sharing. Actually, it's not even data sharing. It's data learning sharing. It's a much more sophisticated architecture for it. And once we solve for that, you're going to start seeing data markets and data trust being put around legislation with data oversight. So it will become more the ability to share learnings around data. So homomorphic encryption and data federation, it's learning federations, right? It's going to become a thing that we thought it was going to be 20 years. It will come here about 3 years ago. Now the horizon for it to arrive is a lot closer, which will solve a lot of these data sharing and inference sharing challenges we're having today. Once you have that put under one financial sector, one region, that it's going to open the doors to a lot of other things that before we just weren't able to do.
And in Singapore, with transaction-based reporting, that's going to be on steroids.
That's correct. And we've got a lot faster so that hopefully we can. You know what's funny about that though? The technology is still Canadian. At the end of the day, what for instance Dr. Richard Simmel at University of Toronto is doing is informing what we're trying to do over here. So something to be proud of and something to reflect on, because we got to have a lot more companies like Minerva and you guys being over here.
Absolutely. And then from my perspective, I'd really like to see the bets being made in personal financial management. I think that AI is the perfect tool in order to help relieve the world behind financial stress and educate us in a way where we're using money correctly to alleviate debt, alleviate stress, etc. At this point, there's no other questions that came in. So what I'd love to do is just close off our session here. Jennifer, Luis, Solange, thank you. This was phenomenal insight, phenomenal perspective. TFI, Government of Ontario, and Singapore FinTech Festival, thank you for hosting a panel on AI and all data. And we look forward. That concludes day one for today, I believe. And thank you for all that attended. And please join us on December 10th at 8:30 a.m. Eastern Standard Time for the second and final day. Thank you again. And thank you all for listening. Take care.
Thank you.
Thank you for having us.